What's going on YouTube? Mike here, back again with the 8th video in 5-Step Forex, a free Smart Money Concepts Forex trading course. And today I'm going to be going over step number 4, which is entries. So make sure you subscribe to the channel, turn on your notifications because you are almost through a free course that I'm using to launch my YouTube channel with. And so if you're stumbling upon this video randomly, you've never heard of the channel, you're actually in the 8th video in an 11 or 12 part mini series that's on my YouTube channel. And if you want to check out the rest of the videos in the course, you can find a playlist above or below you somewhere on the page, and it will actually take you all the way from the introduction, all 5 steps of 5-Step Forex, including a conclusion and putting it together. So thanks for watching, and let's go ahead and get started. So today we're starting step number 4, which is entries. Before we get started, make sure you check out 5stepforex.com and renegadeforex.com for some more free resources. Also, like I said earlier, be sure to subscribe to the channel and turn on your notifications so you don't miss upcoming videos in me. And as we wrap up this course, the content is going to get better and better. We're actually working our way towards putting all 5 steps together into one easy, fluid motion to learn how to trade Forex using smart money concepts. So quick overview before we get started. As always, I do the first lesson on one of the steps in 5-Step Forex as a slide PowerPoint presentation. And I do lesson 2 as an actual walkthrough where we apply what we've learned to an actual chart. And so this video, we're going to be doing a slide walkthrough of entries and entering a trade, how to enter a trade, where to enter a trade, and as well as where I place my stop loss. And so yeah, let's go ahead and get working into the content now. So quick overview of the actual slides here and what you're going to be learning. So you're going to learn the different types of entries. When you're using smart money concepts, there's a few different types. You can use a risk entry, confirmation entry, double confirmation entry. You can also refine your entries to go lower and lower, and then add in either confirmation or risk entries on refined points of interest. You're also going to be able to learn and understand where to actually enter a trade, where to place a stop loss. And then always, as I always like to remind everyone, this information, everything that you're learning in this course is valid and applies to any time frame and any chart. So it doesn't matter if you trade one pair and I'm talking about another. It doesn't matter if you trade stocks. It doesn't matter if you trade indices. It doesn't matter what you trade. This can be applied to any chart and any time frame. And again, just to stress this, if I'm talking about the 1 minute, the 5 minute, and the 15 minute, that doesn't mean that it only applies to that. It can apply to the daily, the weekly, even a yearly chart. If you're looking at yearly charts, you will see some of these patterns show up repeatedly in the markets. And so I just like to stress that at the beginning of the video, because I know that there's a lot of people that are going to ask a lot of those kind of questions, like, what about this pair? What about that time frame? And so on. And just always remember that it doesn't matter. It applies to any time frame and any chart. Okay, so before we actually talk about entries, we need to elaborate on what's called a point of interest. And this is also abbreviated as POI. A point of interest is basically a supply and demand zone that we talked about in previous videos. So supply and demand zones are considered high value areas for a trade entry. And instead of saying all that stuff, and trying to spit all that out, we now have the term coined points of interest. And so we then abbreviate that as a POI. So throughout this episode and the next, I'm going to be using the word POI or point of interest. You might hear me say high value area. You also might just hear me say supply and demand zones. These are all the same things. And these are all where we actually enter and frame our trade around and place our stop loss above or below, which we'll get into in just a little bit. So like I said, we use supply and demand zones as well as flip zones, which I go over in the course that I have in depth. We use those for areas to actually enter a trade. Many people refer to these zones as POIs or points of interest. Also, a lot of the times I refer to it as a high value area. In my course I do actually go into why these areas work and the mechanics behind them. in short, it's because of buy to sell candles and sell to buy candles. And we talk about all about that in the course I have. So if that's something that you're interested in, be sure to check the links below this video. And so first of all, let's talk about risk entries. A risk entry is simply a set it and forget it method to trading. Once you see a break of structure with a clear POI, you can simply place an order on the POI and wait for the price to tag in your order. If price moves to the next range without you, you simply move your order and find the next POI to place your order at. This is great for people who want to be hands-off with their trading. We use pending orders in this scenario. Buy limit or sell limit is what that is actually referred to on your broker. So a lot of the times you can, well, anytime you can do market execution, you can do buy limits, and you can do sell limits. Buy and sell limits are actually pending orders. We actually wait for price to come and tag you in. So this is great for people who have a job that's during peak trading hours, or for people who don't want to be on the charts constantly trading lower time frames. If you're someone who wants to trade the 4-hour and the daily chart, then this is great for you as well, because you can still find really high risk to reward setups and not necessarily need to be always looking at a chart to confirm your entries. You can just set it and forget it. And once your trade is tagged in, you can then monitor it and watch what's happening in the market. So a few examples of risk entries. In this example, we're looking at a short, and as we can see here, we have the supply zone. And in the earlier videos, I talk all about supply zones and how to mark these and everything. So if this doesn't make sense to you, be sure to check out the videos before this episode in the 5-Step Forex free smart money concepts trading course. But here we have a supply zone, and this is marked by the gray box right here. And as you can see, price sells off and then it retraces back to mitigate the zone and then continues on further. And so this area right here, this gray box, and also just this candle, is where we actually frame our entries and our stop loss around. So how do you actually use an entry with a supply zone? Well, what we're going to do is, in the market, if you're actually on your broker, you'd be setting your sell limit right at this line, the bottom border of the supply zone here. Okay, and we're going to go over into this later in depth, but as you can see, price comes back and returns. And if you had a sell limit here, it would actually have been triggered and then sold off quite dramatically, really, to new lows. And we'll go over targets and everything in later episodes, and then put everything together. So I really just want you, as I get closer to the end of this course and the end of these videos, I have to kind of talk about everything, but I also really just want you to focus on the entries for now, because we're going to be putting it all into, like I said, one fluid motion in a later video at the end of the course. So just to recap on that, the entry goes at the bottom of supply zones right here, and the stop loss would go above this zone here. So here's a buy example. Same thing, just upside down. We have a demand zone, otherwise known as a POI, point of interest, high value area. We have our box tool drawn on, so from the high of this candle to the low of this candle, and we drag it all the way out. And if you're actually trading this market live, you could have set a pending buy limit right here with a stop loss below it, and it would have gotten triggered to run on to new highs. And so if you're wondering, if you're not familiar with TradingView and the tools, this is actually a risk to reward tool. This box that's all the way around this right here. And I'm sure noticing this and the last slide here, you can see these are very high risk to reward setups. And that's one of many pros to actually trading with smart money and becoming an institutional style trader, is that the setups are very high risk to reward. And so basically, this is just showing that the loss or the risk, and then the reward is in gray. Same on the last slide. This is the risk, and then this is the reward in gray. And so again, we can expect that for buy examples, the pending order can be set on the top of the demand zone or the upper border of the demand zone, and stop loss is on the lower border of the demand zone. So that was for pending orders, or what we also refer to as risk entries. And those are for people who don't want any confirmation going into a trade. You just simply see a break of structure, a clear supply or demand zone, and then you just set a pending order and you just forget about it. And so that's a really easy way to trade. It's an easy way to, just be really simple and keep it hands off and not have to worry a whole lot about what's happening on lower time frames and stuff like that. So now that we've covered that, let's go ahead and go into confirmation entries. I go over a lot of this in depth in my course, and so I reserve this content for my actual paid in-depth course where we talk about swing structure, confirmation entries, all that kind of stuff. So, but I do just want to touch base on it here, that you can essentially take this entire course that we are going through right now, that you're working through, and you can add everything to that again in your entry point. And you can do this on a lower time frame, or you can do this on the same time frame and look for all of the stuff in this course that we're going over in and around your POI. And so that brings us to confirmation and double confirmation and refined entries. But basically, this will add confluence to your trade setups, and it will improve your accuracy and also improve your risk to reward. These are all more hands-on and require more attention when price comes into your point of interest. So in other words, you're going to have to actually be monitoring charts and monitoring what's happening on multiple time frames. But in doing so, you will get much more confirmation that a trade is actually going to go your direction. Where with using risk entries, like we just talked about in the last couple of slides, you're essentially just hoping that price goes in your way, but there will be times where it just trades directly through that POI and just, flies right through your stop loss. And if that goes against your risk appetite, you're not going to have an easy time constantly setting pending limits like that. And so just to wrap it up, you can also look for a change of character inside the point of interest. And that is kind of how we frame our confirmation and double confirmation entries. So now let's go ahead and talk about potential stop loss placement. Your stop loss always goes at least on the opposite border of the POI as your entry. So for a buy, it goes on the bottom of the point of interest. And for a sell, it goes on the top of the point of interest. Some traders may prefer to use the swing high or the swing low for their stop loss placement. This will reduce your risk to reward. However, if price does just wick your point of interest and it just wicks the top or the top of your supply zone or the bottom of your demand zone, your stop loss would be safe because it's behind the swing structure. A lot of this is going to be all up to you on your risk appetite and how you like to trade. But essentially, the stop loss just goes above or below the point of interest. And so here's some examples of potential stop loss placement. We kind of already touched base on this in the last slides, but essentially on the bottom of the demand zone, so this lower border, your stop loss would go just below this. And on a supply zone or a sell position, your stop loss would go above this point of interest or just on the other side of the upper border of the point of interest here. And so this can be notated in the green risk to reward tool. The stop loss would be just a few pips above the actual point of interest. So just for full transparency, there's a few things that I do leave out. Kind of already touched base on a lot of this in this episode, but in my full course, I do actually talk about confirmation entries, double confirmation entries, and refining to lower time frames, as well as flip zone entries, when to use an actual flip zone and when to just use a normal swing high and swing low. Also talk about swing structure in general and break down how to actually read and why buy to sell candles and sell to buy candles work and why it makes this strategy so effective. So if you're interested in any of that information and taking your trading to the next level, be sure to check the links below this video and you can learn more about my full in-depth course. So in conclusion, entries can be as complicated or complex as you want it to be. Some people may not like setting a pending order and forgetting about it. Other people may not want to watch charts all the time and find this basic system very easy and passive to use. Stop losses always go on the opposite border of the entry. That's the easiest way to think about it. The opposite border of your entry is where you will place your stop loss. If you have a low risk tolerance, you can use the swing high or swing low to place your stop loss behind. But just keep in mind, it will reduce your risk to reward because it's going to make your stop loss bigger, which then reduces your position size if you're using smart money management, which is also something that we go over in the course on how to actually remain a professional trader and risk your capital accordingly. So one last time, just remember this applies to any time frame and any chart. It does not matter. If you want to watch this mini course ad-free in a structured members area, so in an actual course setting, you can do that by clicking on the links below this and upcoming videos where I made an actual Patreon group. And if you join the Patreon group and support the free content, you actually will get the ad-free content in an actual structured course, as well as many other bonuses. So be sure to check that out. Also, if you want a copy of my slides for your notes, you can access those at the links below for 100% free. Just go ahead and enter your email and I'll automatically send that to you within a few seconds of opting in. So this concludes the 8th episode in 5-Step Forex, a free Smart Money Concepts trading course. In the next video, we'll go through a walkthrough of entries and actually apply it to live charts. Make sure you subscribe and turn on your notifications. And like I mentioned a few times, check the resources in the description below this video. There's a lot of valuable stuff down there. Thanks for watching, and we'll see you in the next video.